I'm really excited. I love to do these types of videos where I present stocks to buy in the upcoming year. So I want to provide you with 10 stocks to buy in 2025. Now let's talk about the Magnificent Seven. I'm going to call them the Mag 7 because when I repeat that word too much, I really butcher it. So Mag 7, they have been dominating the last 2 years, and that momentum could be challenged in 2025 as valuations have risen significantly. We may see investors cool off a bit from buying these stocks. And I'm sure the Mag 7 will remain popular, but opportunities may arise outside this group that I believe are worth buying in 2025. Again, the unstoppable Mag 7 consists of Google, Meta, Apple, Microsoft, Nvidia, Amazon, and Tesla. Now, bulls on these 7 Mag stocks say that some of them could cross the 4 trillion market cap range in 2025, which is crazy because it seems like just yesterday they crossed the 3 trillion market cap. And stocks like Tesla, analysts say, could double its price thanks to autonomous driving technology and potential. But I think we need to see real life examples and some big momentum on that for that to happen, just my opinion. So I'm not saying to not invest in these companies. I think you should. They're great companies overall. But I want to simply provide some different options as, let's face it, the economy is made up of more than just these 7 companies, and there are absolutely good opportunities beyond the Mag 7. So to begin though, I do want to pull one stock from the Mag 7 as I believe just one offers good value. It's a good value play here, shall I say, and that is Google. Now Google operates the world's most dominant search engine, has a solid 3rd place in cloud with Google Cloud, and it's growing fast. And they have a dominant online video platform called YouTube, which you and I are watching right now, and it has no real competitors. And Google has other promising bets like Waymo, which is the leader in autonomous driving and has Robo-Taxis in 4 cities compared with none for Tesla. Now, there are challenges for Google. One is competition from artificial intelligence as it attempts to eat at Google's dominant search business. So far though, revenue for its search business has not shown any signs of weakness, so I think they will be able to fend off competition easily as users are unlikely to switch due to it being the preferred search engine of choice because of familiarity, which creates habits, and usability. Now, I've personally seen many in my own life, friends and family, try to switch off of Google search onto a different search engine just because they wanted to, or there might be one little thing they don't like about Google search. But guess what? They all come right back to Google search as it's just so user friendly and people are just so used to it. It's hard for them to switch and learn something different. Now, Google is also good at integrating many services from Google Photos, Gmail, Google Maps, and more. They have created that ecosystem that is hard to leave. I also believe they will fend off regulatory challenges as they can prove how competition is fiercer than ever and how it would hurt the consumer, and it would be a detriment to the innovation of the US, which could allow foreign companies to sweep up market share, and we don't want that. Now, Google has risen lately as they showcased the development of their new quantum chip with enormous computing power. And as far as valuation, the stock is around $200 per share, and it is the cheapest of the Mag 7, trading at 21 times projected 2025 earnings against 25 for Meta and 30 for Apple and Microsoft, which are next in line. Now, Bill Ackman recently said that Google is one of the greatest businesses in the world, and I do agree. I don't think it's the greatest, but I think it's in the top 5 or 10 for sure. Now, due to all their different dominant businesses and future potential, I think the stock can reach easily $250 per share in 2025, and it's one I may buy and add to my portfolio myself. Now, the next stock to buy for 2025 is ASML. ASML is very important to the semiconductor industry. This is a Netherlands-based company that makes specialized lithography machines which use extreme ultraviolet light that allow the production of high-performance chips used in smartphones, PCs, and data centers. These machines can cost $200 million or more. ASML has virtually no competition as nobody else in the world currently has the technology to make these high-end EUV machines, and they are Europe's #2 tech company. The stock is trading in the low $700 range and trades for 28 times 2025 earnings. The stock recently fell around 20% in October after cutting its 2025 revenue guidance. Even with this cut to revenue, lithography spending is expected to rise at a 10 to 20% annual rate through 2030, which equates to tens of billions of dollars in additional spending. The stock is trading cheap versus its long-term forecasts, and long-term is the name of the investing game. Analysts expect this stock could increase to $1,150 per share by the end of 2025. ASML has a monopolistic position and should be able to capture the majority of the projected increased spending on its machines. So I really like this one for the number 2 pick. Now let's move to the third stock on my 2025 buy list, and it's one from my portfolio, and that is Health Equity. Now, Health Equity is the number 1 administrator of health savings accounts, so they already have a wide moat in this area that I feel will grow at a fast rate as individuals learn about the benefits of these triple tax advantage accounts and adopt them. Health Equity makes their revenue from fees, and that is a beautiful structure to have if your product grows, and Health Equity accounts are growing year over year by 15% as of their most recent earnings. And they have 9.5 million HSA accounts they administer. The coolest thing to me is that you can invest the money you put into your HSA, which makes it more of a long-term product. I have done many videos on this, just one last week, so if you want to know more, be sure to watch those. Also, we have a new administration coming in, and Trump has signaled he's in favor of HSAs, so I think these next 4 years will be a huge opportunity for this company to grow, and why I put it on the list. This one is absolutely a long-term play. Health Equity trades in the low to mid 90s right now, and I think they can be at 120 a year from now. Of course, all depends on their growth of these HSAs, but so far each earnings, they are growing these accounts, and the CEO once said they want these accounts to outnumber 401k accounts. That's a pretty bold statement. It's one I keep a close eye on, but last earnings was strong, and I still remain very bullish on this stock. Now, the fourth stock on my 2025 buy list is Berkshire Hathaway. 94-year-old Warren Buffett is the CEO of this company, but has handed off many responsibilities to others, so though he will unfortunately pass someday, and that will be a sad day, he is preparing this company to keep on with its success. The company is an ETF in itself, as it owns and manages so many companies that it produces earnings from, such as the world's largest property and casualty insurer, the Burlington Northern Santa Fe Railroad, and Berkshire Hathaway Energy, one of the country's biggest utilities. Berkshire Class A shares trade just shy of $700,000 per share, and analysts think it can be at $800,000 per share by the end of 2025. The main bull case for Berkshire is that this company has very strong fundamentals, and it is sitting with $310 billion in cash, which makes it one of the most defensive mega cap stocks. If the market gets any meaningful dip, Warren Buffett could go on an acquisition spree, further building on this armored beast of a company. This is my safe pick for 2025. The fifth stock on my 2025 buy list is Everest Group. Everest is the fourth largest global reinsurer with high returns and impressive growth in recent years, yet it is trading at just 6 times 2025 earnings and is one of the cheapest stocks on the S&P 500. You would think this is a troubled stock, but it is not. The stock is trading around $360 per share and trading far behind peers. Investors are mainly worried about a boost in its reserves, which is money set aside for losses, but analysts think despite any increases, they will reassure investors about reserve adequacy, leading to a rally in the stock. Everest aims to generate 17% shareholder returns through 2026. If it achieves this, analysts think this stock can be up 50% over a 2-year period. Basically, the stock will not stay at a 6 multiple forever, so now's the time to buy. This is a 100% value play. The sixth stock on my 2025 buy list is Uber. Uber has fallen over 30% from its October peak to the low 60s. Investors are worried that Robo-Taxis may bypass the Uber network, as Google's Waymo said it would launch its autonomous vehicles in Miami in 2026 without a mobility partner. Many think these concerns are overblown, though, as Uber remains the dominant ride-hailing and food delivery service. Everyone I know uses Uber, and they have over 150 million users, which provides Robo-Taxi operators access to a huge customer base. Again, just like Google, once customers are used to your product or service, it's hard for them to switch. So I think it will be an attractive partner for others to seek for robo-taxis. Even if other companies try to do it on their own, it's expensive to operate at scale and could take years to make a dent in Uber's market share if they do. Uber argues that aggregating autonomous and human drivers on its platform offers a powerful combination that will benefit users by boosting reliability. The stock is valued at less than 30 times projected 2025 earnings and under 20 times estimated 2026 earnings. If Uber keeps growing at fast rates, then this is a great time to buy this company. Some risk, but ample reward. Now, the seventh stock on my 2025 buy list is Taiwan Semiconductor Manufacturing. TSM is the world's leading contract chip manufacturer and makes chips for nearly every company that produces anything related to artificial intelligence. Management expects revenue to triple this year in 2024 and is unlikely to slow down much in 2025 with this huge AI push, and analysts expect revenue to grow 25% in 2025. The stock is trading for 22 times 2025 earnings, which is not that expensive considering its historical levels and future expected growth rate. Analysts are bullish and think this stock could rise 28% next year. This is an important company with a healthy growth rate at a good valuation. Now, the eighth stock on my 2025 buy list is CrowdStrike. Two hot industries right now are AI and cybersecurity. But these aren't just fads. They are here to stay and will remain important for a long time to come. So this is my cybersecurity pick. Of course, we all know of its infamous outage that crashed millions of devices, and this company is still dealing with this incident. The company is strong though and has stated that the company's customer pipeline has returned to pre-incident levels, so it did not derail the company like many were expecting. Last quarter, CrowdStrike's annual recurring revenue increased by 27% year over year to more than $4 billion, and the company has a goal to reach $10 billion. I think it will get there no problem. Not the cheapest on my list, but CrowdStrike's a top cybersecurity provider and is essential in a world of constant attacks, and its growth remains impressive. It's currently in the $380 range, and analysts have a high-end estimate of $540. I'm not sure it will reach that, but I see this as a long-term solid play that has a pretty secure path for fast growth for a long time to come. Now, the ninth stock on my 2025 buy list is Union Pacific. Now, this one is another defensive play and one I hold in my portfolio. Our nation depends on the transport of goods, and there is no better, more efficient way to move large bulk and large items than by train. The railroad business is a monopoly, and the main players are unlikely to ever see new competition due to the massive amount of capital it would take to build out a new railroad system. So there's a very wide moat with this industry. Union Pacific offers something unique to others. It's beaten down and poised for growth, as the CEO has made it clear they're making efficiency their main priority. And so far in every earnings, that is just what they are doing. Eventually, these numbers will be enough that investors will increase their investment in Union Pacific, sending the stock rising. Of course, the risks are that these companies have high capex, so they need to be managed well, and any derailment could send the stock down, but I would see that as a buying opportunity. The stock is now in the 230s, and analysts have a high estimate of 285. I own the stock, I can sleep at night with the stock, and if it dips below 220, I will be a buyer of this company and think it would make a great buy for all investors. It's good to have that defensive play that you know will remain sturdy in your portfolio. It's one that is relatively inexpensive and long-term will provide dependable growth in your portfolio with low risk of volatility. It's a boring play, but those usually make the best investments. Because of its boring nature, I think the stock can reach up to $260 by the end of 2025. I don't think it will hit the bullish high of 285. It's one staple stock that I will always keep in my portfolio. The 10th stock on my 2025 buy list, which is the last stock I'm going to mention, but I do have a little bit more to tell you about after I show you my portfolio, is Vici. I think it is good to hold at least one REIT, and to me, Vici stands out above the rest. And it's one I hold in my portfolio. It's an experiential REIT with many of its properties on the Las Vegas Strip. Some of their famous properties are MGM Grand, Caesars Palace, and the Venetian. These properties are not ones that will be replicated anywhere else on earth, and they so happen to sit in a city that is the entertainment capital of the world, Las Vegas. So I see a very unique REIT with high quality, irreplaceable properties, unlike others like Realty Income, let's say, whose retail box stores are nothing special. They depend 100% on the tenant, whereas Vici has the tenant and the property that they depend on. Both are strong here, though, with Vici. Also, Vici collected 100% of rents on time during the pandemic, and to me, that shows they can weather any storm. They are expanding nationally in different areas such as golf resorts, bowling entertainment properties, wellness centers, and more. I see a huge opportunity to expand internationally, which they have begun to dip their toes in. They do triple net leases, which is a phenomenal structure, and they offer a capital program that allows owners of the building that sits on Vici's property to update it without getting a loan outside of Vici's control. Not to mention they pay a juicy 5.4% dividend currently. Risks are that the interest rate environment stays higher for longer, or if a tenant leaves the property, but with iconic properties, I bet they would have many knocking at their door to occupy. Vici is trading in the $30 to $31 range. Analysts have a high of $43, but I think the stock is most likely to be around $36 by the end of 2025. Of course, a lot depends on the interest rates though. I will add, if this stock drops into the 20s, but for a long-term play, I feel this is a very attractive REIT to buy in 2025 at current levels. It's just that I already have this as a big position of mine. Okay, so there's the 10 stocks I think will be great buys for 2025. It's a mix of growth, opportunity, value plays, defensive plays, and dependability, all things that will create a resilient portfolio. And speaking of portfolios, let's look at mine now. You will see here overall, I'm just shy of 35% in the green. Of course, Amazon is the one that's really roaring right now. It's 110% in the green for me. If you see Realty Income down there, it's the one stock that has hit the red just recently. And to be honest with you guys and transparent, I'm thinking of selling this one. I just don't think it's a strong long-term bet. Yes, it's dependable, but I think I already have enough of that in my portfolio with Union Pacific and the big tech and my ETFs. So yes, that's one I might sell. Now there's Vici, one of the recommended buys. It's in the green for me, 5.31%. We also have Health Equity at 19.89% and Union Pacific at 18.75%. So these are ones that I probably will be adding next year, and I'm leaving room for one or two more stocks to add this to this portfolio. So this next year you should see that happen. So I'm excited to share that with you when that occurs. Now, as an added recommendation, you saw there I hold SCHD and SCHG. One's a dividend ETF, one's a growth ETF to capture both those markets. So I also say with quality ETFs like this to keep dollar cost averaging. Do not stop investing. Just keep adding to these. Long term, that's going to benefit you. So these are also buys for me in 2025. Let me know your stock picks for 2025 and why. I may just take some of your recommendations and do an analysis and video on them as well. So thanks for tuning in. This is a transparent and consistent channel, so please consider subscribing as a lot of time and effort goes into these videos. I really appreciate all of my subscribers and hope you join this investing family where we all help each other become wealthy. Happy holidays, happy New Year's, and as always, happy investing. See you soon on Mark Arnold's Finance.